Tesla is up very nicely this morning in a down market. And I'd like to start today with a quote from Elon, which I think you'll appreciate because I think you'll agree with it for your own life as well as it has application to the program. All right. Elon says, the more you do, the more you do, the more you do, the more you get wrong, and the more you get right. He says, as far as my predictions are concerned, what has to happen in media is that they will report all the wrong ones and ignore all the right ones. He says, I've had a long career in multiple industries. If you list my sins, I sound like the worst person on earth. But if you put those against the things I've done, it makes more sense. So essentially, the longer you do anything, the more mistakes that you will make cumulatively, which, if you sum up those mistakes, will sound like the worst predictor ever. So isn't that true for you? I know it's true for me. And that's what my detractors, even in this space, would be talking about. So I would ask that some of you give Elon a break and also give me a break. I'm willing to make calls, public calls on the direction of the economy, on the direction of Tesla, on the direction of the market, and on Tesla stock. I make these calls every single day, sometimes 3 times a day. And once in a while, I'm right. Judge me based on the difficulty, the clarity of the analysis, and then give me due credit when I do hit something out of the park, which has happened more than a few times since I've started this channel. And maybe that's why some of you watch the channel, is because sometimes, well, the clock is right 2 times a day. A broken clock, I'm sorry, made that quote very bad. Anyway, so some believe that the stock market is moving right now in lockstep with the street's opinion on whether Elon's compensation package will be passed. The stock is solidly up this morning in a down market as proxy advisor firm Egan-Jones calls for a yes vote. Yesterday, the largest public pension fund in the U.S., CalPERS, said pending a conversation with Tesla, they're planning to vote no. Elon Musk then specifically chastised them for that position, given that they have realized an 11 times return on investment since the voting in 2018. CalPERS had initially said they had voted yes on that package in 2018, but they're out this morning reversing that and saying they erred and they voted no in 2018. But does it really matter? Is the vote was a vote of all the shareholders. Once the vote is in, CalPERS is in on the deal, unless they sell their stock. If they thought it was a horrible deal, they should have sold. That would have been the appropriate thing to do. Oh my gosh, this compensation package is horrible. What a terrible thing to do. It's going to destroy the company. We'll sell all of our stock. But no, they hung in there. They kept their stock and they made an 11 times gain. And now they don't want to pay Elon for his effort. Well, maybe the stock is up today on this news from Teslarati. Tesla may be taking some steps toward the highly anticipated release of full self-driving in China. Now, that would be a significant deal. As per a recent report from Reuters, the electric vehicle maker is reportedly making preparations to register FSD with authorities in that country. Citing 3 people familiar with the matter, Reuters noted that Tesla's efforts to register FSD with authorities are part of the company's efforts to roll out advanced driver assist system later this year. The publication sources also claim that Tesla is looking to roll out a subscription-based version as well. If Tesla is successful in registering FSD with China's Ministry of Industry and Information Technology, company employees will likely start testing the advanced driver assist system on the country's public roads. I'm guessing they're already doing that. Oh, don't tell anybody though. The addition of FSD will likely allow Tesla to gain more users in China. Yes, that's pretty obvious, especially since until today, only basic autopilot and enhanced autopilot are available for use in that country. By the way, this is Randy Kirk, and if you'd like to help out the channel, here are 3 or 4 things you could do. Number 1, you could hit like. That'd be great. First of all, just watching is super. That really helps the channel. Number 2, hitting like helps as well. Hitting subscribe is a real benefit, especially if you do look at your subscriber list from time to time and jump in based on that. Hitting notify helps me. I love to see how many people who are jumping in early on any new episode are coming from the notification group. That's very helpful to me, but I think it also helps the channel. And then finally, a huge help right now, and thank you. Oh, yesterday we had another person join. I didn't write it down for this show. I'll do that for the show tonight or tomorrow morning, I guess. But yes, we had another person join yesterday. Thank you very much. Love to get a bunch more here before the end of the month. All right. Why would you want to hit notify? Of course, that is to remind you that later tonight, Bradford Ferguson will be on. Also, part 2 of my conversation with Brian Wang. That'll be on around 11 o'clock, and we will be discussing the massive potential for solar/battery in the United States. It's going to be a big contributor to Tesla's bottom line. There's a massive opportunity, not just in the United States, worldwide, because why? There's a unbelievable electricity shortage coming. It's going to be massive. Elon's already been talking about it. The only way that we're going to solve it is with battery/solar. There's no other way to do it. And that's what Brian, the genius for the channel, coming in, he and I will discuss how there's no other way to do it. And solar, of course, combined with battery would be a big plus for Tesla. All right, this out this morning from Market Watch. The increase, all right, listen, this is so important, so please pay attention. A lot of stats here. The increase in gross domestic product, the official scoreboard for the economy, was the smallest in almost 2 years. Previously, the government reported that GDP had expanded at 1.6 rate in the first quarter, but it came in at 1.3%. The biggest contributors to the tepid GDP report were wider trade deficit and then less production of goods and services. Yeah, well, that would be important. Yet the revised report also showed consumer spending, the main driver of the economy, grew at a 2% pace, but that was down from 2.5 as previously indicated. What have I been saying? The consumer is running out of power. They don't have any money left. Household spending had risen at a 3% rate in the prior 2 quarters, and this is going to continue to go down, in my opinion. GDP could partly bounce back in the second quarter, according to Market Watch. The latest forecasts indicate the economy may have grown 3% or more, similar to the last 2 quarterly readings in 2023. Nonsense. I'm just going to tell you right now, there's not a chance in the world that the second quarter grew at 3%. Maybe 1%. Maybe another 1.3, but not 3%, guaranteed. And it will go down, even if in some shocking way, it increased in the second quarter up to 3%, maybe because of some weird change in terms of something like the inventories or the import-export, the difference between the two. Potentially, you can always have these odd situations. I don't think it's going to happen. But whatever that might be, it will be down in the third quarter, maybe 0 and maybe negative. The rate of inflation was little changed. Now, you see, we get a little bit of a hit at the PCE tomorrow. The PCE price index, favored by the Federal Reserve, rose at a 3.3 rate, down a tick from the original estimate. Key details: the slowdown in consumer outlays in the first 3 months of the year largely stemmed from less spending on new and used cars. Okay. Auto sales fell slightly in the first quarter, and dealers cut prices to try to lure buyers burdened by high interest rates. As a result, consumer spending on durable goods dropped 4.1% in the first quarter instead of the 0.4% previously reported. Yet spending on services, which accounts for the bulk of consumer spending, rose at a 3.9 annual rate. That suggests households are still spending at a fairly healthy rate. Gross business investment, meanwhile, rose at a solid 3.2 clip, and that was unchanged from the prior estimate. So this is a big one, although it's only 15% of the GDP, is what is business going to spend in the second, third, fourth quarter. there's a lot of opportunity to spend on AI, to spend on chips and computers and all the peripherals that go along with that. And, there's always going to be opportunities to spend on automation of all kinds or on just general CapEx, building more buildings, et cetera. I don't think so. That's just me, but we'll see what happens. Corporate profits fell by 0.6%. To mark the first decline in 4 quarters. Profits may be taking a hit from the unwillingness of consumers to keep paying higher and higher prices. Corporate profits fell by 0.6% in the first quarter. A measure economists look at to gauge the underlying strength of the economy was still somewhat positive, though. So-called final sales to private domestic purchasers grew at a 2.8% annual pace in the first quarter, but that was down from 3.3% in the final 3 months of 2023, and any number above 2% is considered quite positive. The slowdown in first quarter GDP was also exaggerated by a few factors unlikely to repeat in the second quarter. A rising trade deficit shaved 0.9 percentage points off first quarter GDP. Now, see, that could reverse, and maybe the trade deficit goes the opposite way in the second quarter. Maybe. A slower inventory production cut 0.5% points off the headline number. So you could have inventory increases in the second quarter, which would also impact the GDP. Big picture, even if second quarter GDP rebounds, the economy is unlikely to show much swagger the rest of the year, according to Market Watch. At least they agree with me on that one. The housing market might be better than I've understood it. Oh, I'm sorry, new story. So sorry, I did that again. The housing market might be better than I've understood it to be. Well, at least according to this one data point, so we can't say so quite yet. There's been a major shift in the market, says housing economist Al Wolf, and the big builders are dominating. He says that they track the market via our Zonda market ranking. The ZMR looks at sales adjusted for seasonality and supply and puts the numbers in context compared to history. The national market came in at slightly overperforming for April. Markets like Cincinnati, Columbus, parts of Texas, inland Southern California. That's where I live. Oh, and Philadelphia are currently the strongest markets according to ZMR. We see San Jose, San Francisco, and Salt Lake City as the weakest new home markets, with each falling into our slightly underperforming category. Smaller builders are not doing so well because they don't have the strength to offer mortgage buy-downs and other similar incentives. Well, okay. On the other hand, with home prices and mortgage rates rising, buyers seem to be pulling back on signing contracts on homes for sale. So I'm of the opinion that the first, as you've heard me say, is that over the winter, a lot of people went out and bought homes. They bought new homes. They bought resales. There was a lot of activity over the winter. It was higher than expected. This commonly causes lower than expected activity in at least the first few months, March, April, May, of the season, if you will. This is suggesting that new homes, at least, they might have been more activity than we've expected, but we'll be watching for other kinds of news, like maybe this one from Market Watch. Pending home sales fell 7.7% in April from the previous month, according to the monthly index released Thursday by the National Association of Realtors. 7.7%. Pending home sales reflect transactions where the contract has been signed for the resale of the home, but the sale is not yet closed. Economists view it as an indicator of the direction of existing home sales in subsequent months. The sales pace fell short of expectations on Wall Street. Economists were expecting pending home sales to fall 0.4, and they fell 7.7. Transactions were down 7.4 from a year ago. So I'm going to keep my eye peeled on this housing thing, because remember, housing is 10% of the entire market, and the other aspects of housing, mortgages, going to Home Depot and getting your new stuff to put in your home, all of that represents almost another 10% of spending. So Home Depot has been down, as you know, Lowe's. These people are not seeing good things, and this could be a big piece of what happens in the third quarter as we go into what in the third quarter? We go into the off season for home sales. The home sales typically is all over by October 1. All right. The Commerce Department Census Bureau said on Wednesday that wholesale inventories fell 0.4%, just about exactly as estimated last month. And retail inventories were also down a tad, I believe. Something happened to my note on that. All right, let's take a look at how this is impacting stocks. As mentioned, Tesla had been up very strongly earlier. Well, that has been cut in half. It was up over 4, well, not in half, but it's down only to being an increase of 2.85 at this point this morning. We've got the Dow Jones down 386, the NASDAQ down 120, S&P down 25. We have got the Magnificent Seven all down, except for Apple and Tesla. For instance, NVIDIA down 15, Microsoft down 10, Meta down 7, Amazon down 2, Google down 3. So significant down moves by the Magnificent Seven. And in fact, the tendency or the trend right now is down on all of those, just like Tesla, which had peaked and is now down from where it had been. So some of this data coming in impacting the markets right now. We have got the Cathie Woods mixed, by the way, though. More up than down, actually, although by really small numbers. Let's look at the percentages. We've got the Dow down 1%. We got the NASDAQ down 0.7, S&P down 0.48, and Tesla up 1.44. How are bonds impacting all this? I think bonds, last time I checked, were down a tad this morning after the big run up yesterday, but let's see where they are now. We have got the 10-year down 5.8 basis points. So almost wiping out that huge gain from yesterday. You would think that would be helping some of the NASDAQ stocks. Maybe that's part of why Tesla's up this morning. One more potential reason. But let's look at the others. We got the 2-year down about the same, 4.8 basis points, and the 2-month about flat for the morning. Giving us some shrinkage in the 2-year, at the 10-year to the 2-month, and the 2-year to the 10-year, 4.56. Let's do the math real quick. Here is, yeah, it is also, sorry, shrinking a little bit down from where it was. All right, let's go on to oil. That was a hard one because all the numbers were so opposite. It's one of those hard subtractions. All right. We've got oil down 37 cents this morning, still sitting just under 80. Brent also down this morning at 83.09. Natural gas down 2.33. So a little bit of steam coming out of the natural gas market. We've got gold up $5.10 at 23.46, right in the middle of the range. Silver down this morning, 1.91, and copper down 2.86 at 4.65, way off of that $5 level it had been. So my estimation that copper would continue to go way up after hitting 5.2. No, a bunch of profit taking down now to 4.65. All right, we've got the dollar slipping a tad. We have got Bitcoin up 11.40 this morning at 68,540, right about where it has been for quite a while now. Okay, I mean, in terms of the trading range. Great conversation with Jeff Lutz last night. You do want to go take check that one out. I'll put the card right here. And then, as mentioned earlier today, you do want still. The numbers of people that have watched that Brian Wang video from Tuesday, still very small compared to the value that was there. Part 2 is also extremely valuable, and it impacts Tesla's stock way more than the first one did because it involves battery storage. Highly recommend you watch that later today. Anyway, like, subscribe, notify, all that good jazz, and it has been great talking to you.